You recently wrote an article around dividends, and I think let's talk a little about mutual funds now. Uh, there's a lot of investors out there, Ashish, who have actually gone and ticked on the dividend plan. And now today asking, should I remain in the dividend plan or should I be in a growth plan? These are some of the questions that we keep getting from investors. I guess the reason people were taking dividend plans were two. One is they thought that they were getting a reward from the mutual fund. And secondly, in the earlier tax regime, it was tax-free. So they probably felt that I'm getting an additional bonus, so to speak, if you were to use an employee's language. You've written very strongly against the fact that, and some other, voices are also emerging after you wrote your article, where people are saying that if you want power of compounding that you talked about, then you have to be in a growth plan. You can't be taking your own money out. So if you could explain that.
See, it's the same thing. Now, when a company, let's say I told you that a company is growing its earnings at a certain pace. Now, if a company is able to service a particular market, sell more and more product, then definitely why should it give dividend to me? They should put the money back and expand their production capabilities and sell more and make more return. So that's where compounding works. And when you take dividends out, then clearly you are going to reduce your compounding. Now, my sense is that people confuse, dividend is a part of your return. And people confuse these dividends with actually their need for money. In a mutual fund, where are we actually going to give dividends from? You give us money, we are buying some securities. Those securities appreciate, we might sell, realize a particular gain, and we pay it to you. But actually a mutual fund is not a corporate. We don't make like profits from which we share a little bit with shareholders. Ultimately, when I pay you dividend from a mutual fund, I'm giving you your money back because you gave me 10 rupees, it appreciated, I sold it. Instead of buying more stock, some of it I give it back to you. It's your money. It's return of capital. It's not return on capital. But still people take dividends because the fact is that people need some cash flows. A lot of people, they think that, regularly if I keep booking profit, then when the market goes down, I'll not feel that bad. But they're not going to be able to time their entry again and they're going to hurt the compounding. The other reason why people take these dividends is they might genuinely be dependent on that as a source of income and, for taking care of their requirements. But there again, dividends in mutual funds are susceptible to market movements. If the performance is great and a lot of profit has been booked, then they might pay more dividend. Sometimes they might pay less dividend. So returns are going to fluctuate. And if your real need is cash flow, then anyway you can't depend on dividends. So here I'm saying three things. Number one, a mutual fund giving dividend is not the same like company's dividends because it is your money which is being given back to you. The second important thing is that if you think that you're taking dividends just to book profit, then are you sure you will time your entry back? Because you're going to definitely cut down on your compounding. And the third thing is that if you're taking dividends because you need cash flows, then I think it's better that you take a systematic withdrawal rather than waiting for the dividend to come because the dividend is going to fluctuate. It is going to be unreliable for sure. In whichever circumstance you look at it, there's no reason to go for dividend option really. In fact, the government has even reduced any tax differentials. Now, actually, there's no special treatment if you're in capital gains or if you're in dividend. I mean, everything is being taxed. So, I feel that there is no, you look at it fundamentally, you look at it practically, there is no reason why people should go for a dividend option. I would restate that if cash flow is your requirement, don't confuse it with returns.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.